Okay, good afternoon, everybody, and welcome to the Rubicon Indicator training for the 25th of August 2011. This is Frank O'Connor here. Happy to have everybody with us. Good morning, good afternoon, good evening, depending on what part of the globe you happen to be in. What I want to do today, guys, is go over the charts, obviously talk about our methodology for trading and for looking for optimal trades, and talk a little bit today about news. Our market, as many of you know, particularly for the last month, has been really volatile, very much driven by news. So we cannot, or I'll put it this way, we would ignore news at our peril. So we're not going to do that. So let me talk about that a little bit first. Obviously, the big kahuna tomorrow is Mr. Bernanke, but also coming up tomorrow on Friday, American time, that is, U.S. gross domestic product, which is also very important, U.S. GDP, and could have an impact on what Bernanke does, or for that matter, does not do. Gross domestic product in the U.S. increased by only 0.4% in the last quarter, and that was well below the anticipated 3.1% growth. Also, the first release of GDP for Q2 was disappointing at an annual pace of only 1.3%. Now, this reading indicates that the U.S. economy is really sluggish, and it's really been led by a slowdown in consumption by the American consumer. A revision to the downside is expected, so growth to be brought back to only 1.1% for Q1 of 2011. So that's the first important thing to look for tomorrow. That can and will drive the for currency markets, in particular anything that has a US cross on it. USD yen, USD Swiss, USD Canadian, Aussie dollar, Kiwi dollar, etc., etc. You get the idea. Now, also tomorrow, Mr. Bernanke, and he finds himself very much in a tenuous situation following the last FOMC vote, where 3 out of the 10 members opposed Bernanke's monetary policy of maintaining extremely low rates all the way through what he said was, I think, the end of 2012 or mid-2013. He's probably going to talk about the reason behind that tomorrow and a possible scenario of QE3. For any of you watching TV or watching analysts, you're getting mixed signals here, as I am. Some analysts think it'll happen. Most think it won't. There will be he doesn't have room for any kind of a QE3. Mostly QE3 was built on or QE2, possible QE3 was built on a threat of deflation. That was the official reason given for QE2. Now, the chances of that happening with prices on the rise are slim to none. But, however, if he looks to help out the stock market, then we could see it could be called something else. May not be called quantitative easing 3. He may use some other name, but essentially watch out for money being pumped back into the U.S. economy. That's what we're looking for. An example of that is if you look at Europe right now, how in God's name is the euro holding up the way that it is in the midst of incredible turmoil? And there's really only one reason for that. The ECB, European Central Bank, buying up bonds all over Europe. Italian, Portuguese, Spanish, French, and certainly Greek. Now, how bad is it over there? Well, take a look at the Greek bond today. Return on the Greek, I think it was the 2-year bond, today was 48%. Hell of a return if you can hang in there. Hell of a return. But that's the scenario that they find. So can they stop pumping money into Greece? At least not for the foreseeable future. Many of you may have heard rumblings going on about Greece coming out of the EEC completely, or at least out of the monetary component of the European community. And that certainly is a possibility, but not immediately. So in the meantime, until that becomes more of a reality, the chances are the ECB will continue to buy up bonds and try and keep the unity in Europe. Now, what it's doing to the currency is just keeping it strong. And we'll take a look at that in just a moment. So the reason I want to go into all of that is that if Bernanke, for example, announces some kind of stimulus or increasing money being pumped back in, that will it could weaken the US dollar further. what we would see, then you have to watch out on the crosses with that. For example, let me give you kind of a strange scenario. Let me bring up the USD Canadian. Here's the USD CAD. Take it out to a 1 hour, I'm sorry, a 1 day chart. Come on, there we go. All right, daily chart on the USD CAD. If the American dollar weakens, normally you're anticipating the currency going down. This kind of is a little anomaly here with the CAD. I want to bring this up for those of you who trade this, and many of you do. Because Canada, most of their exports are in the US. I think it's 70-80% of their exports come into the sold in the United States of America. Hugely dependent on the American market. If America weakens, so does Canada. But actually what happens is that Canada weakens even more. So as an anomaly tomorrow, if the dollar begins to weaken, watch the USD CAD because it could actually go up. In other words, if the dollar weakens, the Canadian weakens with it, but more so. So that's just a bit of an anomaly tomorrow. Otherwise, on the other crosses, watch for weakness on the dollar if Bernanke announces anything to do with extra money being printed. Otherwise, it could be that really nothing comes out of it. But be careful tomorrow, guys, with the market. Make sure you wait till Bernanke has spoken. That's the main thing. Now let's look at some setups. Let's see what's going on in our charts. First things first, let's cover our natural drill down method. I'm going to go open up the, let's go to Euro Dollar. And as always, what we always want to do, guys, is start out on the daily chart. I have some stuff already marked, as you can see here. Let me remove some of this so we have a clean chart we can start from scratch. One more. Okay. Now the first thing we want to do is always go to the daily chart, guys. This is critical. You've got to know. It's almost like finding yourself not being able to see the forest for the trees. Just picture yourself in a helicopter lifting up above the forest and then having a grand overview and being able to pinpoint exactly where you were located in the forest. That's number one. Where are we in relation to the overall move of the market? What I like to do is see at least 1 year of trading in the currency, and in this case it's the euro dollar. I've gone out just slightly past the euro 1 year because there's a low over here on my left. I want to draw a Fibonacci in the direction of the prevailing trend that I can see, and reading the chart from left to right, that obviously is to the upside. Over the course of the last year, particularly since December 2010, euro kind of peaked out there at the 2800 level and rose all the way up to close to test the 150 level. Now, what I want to do is take the Fibonacci from the low point, pull it up, and drop it on the high point up here. And then the very first thing I want to look at is, what's in play here for me today? And the first thing we see is that it is really in play today, because this 23% Fibonacci has been holding, acting as support resistance on this currency all the way back to May. The high up at the test of the 150 was back at the very beginning of May, and ever since that pullback, you can see that it's spiking back and forth across that 23 fib. And the one thing I do notice before leaving that is our spine, critical. The further up you go, the more influence our red spine has. In this case, it has maintained the price action above the spine, apart from one little dip right here. For that entire time, the price action has remained north of the spine. So our general bias, long term, our general bias is still to the upside. Now again, could tomorrow change that? Yeah, it could. But our general bias is still to the upside. Now, what else do I want to do on the daily chart? Is there any trend lines that I need to be paying attention to? And yeah, I mean, I also see right here drawing that simple trend line, a series of lower highs coming into play. And over the last week, you can see it very specifically coming to that trend line and bouncing right off it. So that's number one. Is there anything on the bottom end I want to pay attention to? You betcha. Right here. And I could squeeze it further even right in here. So there's very much compression going on here. And again, I'm not a big surprise with Bernanke speaking tomorrow, kind of the setup. It's squeezing in to a tighter and tighter range, waiting for the breakout tomorrow. I would put one other last thing on there. And that's just this guy right here. Let me bring that out. You can see the bottom end of that range right here, that it has come back and tested it several times, ranging slightly to the downside. Really relatively flat, because look at our spine, flat up here, back and forth across the 23% fib, but with a slight bias to the downside. Slight being the operative word right there. Now again, I've taken all that information just off my daily chart. Let me let this guy go, because we'll come back to it on some of the lower charts. Now, what I want to do now is take off the Fibonacci, because I don't want too much appearing on my lower charts. However, actually, before I do that, I want to do one more thing. I want to mark that 23% fib, because that is absolutely significant. So that red line is the 23% fib. The other thing, now let's remove before I do that, are there anything else in play? You can also see some support resistance coming into play right here. And that also happens to coincide with the 38 fib. In this case right here, it was resistance, became support, and all the way over here in the middle of July became support again. So now let's pull out the fib. I know now that those two red lines, let's do something to make them a little different from everything else, so we know exactly what they are. I'll just turn them into dotted lines. So I know that's a 23 fib, and I know that the second one is a 38 fib. The last thing we want to do is confuse ourselves as we drop down into the lower time frames. Now you can see how those levels have been in play for quite some time, so we really want to pay attention. Now let's drop down. A 1 hour chart, or you can do this on a 4 hour chart too. What I'm looking for really is the last 2 weeks of price action. And sometimes it's a little easier on the 4 hour chart, but either way, look at the last 2 weeks of price action. I'll show it to you on the 1 hour chart. We'll take it back, depending on the move. I'll take it back to close to the beginning of August, because that's where the move is. That move is, reading it left to right, is to the upside. And the chart itself, if you read it from the very beginning of the chart all the way over, it also is to the upside. And that's where I want my fib to be. Now this is a lower time frame Fibonacci, so I can leave it on there. Now, is there anything else at play here? Well, there's my daily. That's the daily trend line up on the top. Here's that 23 fib on the daily, absolutely coinciding with the 50% fib on the 1 hour. See it right here, guys. Now, anytime I see two of these guys coming together, you really, really got my attention. Here's the first breakthrough that we see here for quite some time to the short side. Today, we did get this spike down. We get a potential sell on a 1 hour chart right here. It never qualifies, so we don't get a signal to sell, but there's a potential sell. That's our green line. The other thing to note there is that before that sell would qualify, it would have to break that bi-weekly Fibonacci on the 38% right here. Now let's blow it out a little bit.